the Fed's meeting are going to carry through the 85 billion bond purchasing agreements until the 2014, but the market obviously didn't like that. Technically, looking at this, we were looking at the 15,300, the top of minor group 1, because if support is found there, then we'll be going for higher ground, and that's not the case. So we're looking at, still looking at our preferred count, our A, B and C count for wave 4 to play out, and that would play out in terms of a 5-wave structure moving to the downside as such here. Normally making a new low below here, looking for the 38.2 retracement level back into this sort of area here. And this is the just have a look at the S&P 500 here, the same thing here, but we use the S&P 500 more so than the Dow because just the broad base of the 500 stock, so to speak. But look, the 1650 is the medium level here, and we were looking for it to become the support or the resistance, and we can normally assume some sort of resistance there. However, it has moved reasonably well to the downside, so we'll be looking at the 4-hour chart here, looking at a 5-wave structure through here. Moving in through these levels through here, of course, this is also group 1 here, the 10, 20 and 30, so there's going to be support offered through this area here, and bounces as such. Now, this move down through here, as such, it would really be confirmed. I know it's a little bit late, but when using group 1 here, once the pivot, the number 2 here, in this case 1620, becomes the retested resistance, then it seems to suggest and lock into lower levels at that point there. So the 38.2 retracement levels down at 1550, but just looking at this trend channel through here and where it cuts in through to here at the 1572 is a probable target there. Drilling into this, let's just drill into this a little bit further here. I mean, this is how this counts here on the 1-hour chart. We were looking at this being wave 1 or the A wave, back for wave 2 or the B wave, and we had that look up through here as the beginning of a 3rd wave. It was headline driven, but it never had any follow through in that. And we do have a 5-wave sequence here in terms of 5 waves here, 5 waves in here, and then we've got our 3rd here, 4th and 5th here, so we've got our little 5-wave structure here as well. So it's more of an ending diagonal triangle as such through this section here, and that's completed. We were talking about that yesterday, how it was just I think we were about it just struggling to the upside there. So this move to the downside here would be looking at that as wave 1 and back for wave 2. So if we break that down a little bit through here, right, just a 2-minute chart through here. I'm just wondering if that's the actual top there, which I assume it is. Just bear with me there. No, it's not. But so we need to take it from this high here. So I might need to work out those little squiggles and take it from this one here, because this one looks like it's got 5 waves here. So this is likely down for... I mean, it still counts as an ABC, but if we just count this as wave 1 here and wave 2 to here, I'm just doing this myself as well. So, and then we've got a clear 5-wave structure to the downside here, as you can see. So just bring that up through there. So we've got this down for 1 here, ABC back for 2, down for 3, back for 4, and down for 5 here. That's still unfolding through there. So somewhere in this little area through here, we'll see a an A and a B and a C wave back up through here, retesting probably that's the supply level through here, because it was resistance, it was support, and then it was a resistance, so that would be a likely place for that to unfold there. So look to sell that retest there. It's pretty much the same in Europe as well, in terms of the FTSE here. We were looking at this, well, I was looking at the 64.20 actually, but there you go. Look, so we're looking at, this is a bit of a rough diamond here, but we'll assume it's in 5 waves there. The reason for that is because this move up through here started off nicely as well, and then we end up with overlapping wave structures through here. So we have to view that as corrective, as it was. We're looking at it as a wave 4, so we're looking at a wave 5 to the downside through here. And you know, our markets are a little bit the same as well, so we need to be mindful of that situation there. And it's, as you can see, it's a little bit the same. And we were looking at 5 waves up here too. We had the 1, the 2, the 3, the 4, and the 5 up through to here. I know that it was corrective going up, but now so I've just labelled that as the A wave, the B wave, and the C wave here. We're expecting it to go higher to retest the 5,000 up through there, and that could still be the case. We just need to allow this to sort of play out. But I can just see here that we've got a little 5 wave, sorry, we've got a 5 little impulse wave through here, so we'll be seeing another one through here as well. Need to make this a bit larger. Just trying to get that in there. So you can see the little 5 wave structure in through here. So we'll get some sort of bounce off the 48 here, and then another 5 down. And down at the 47.50 is the 61.8 retracement level from that lower move through here. So look, I don't know what we quite got here just yet in terms of will we have, you know, is that the rally and that's the end of it, or will we be seeing some type of ABC correction like that, and then another 5 waves up to the downside, to the upside, and then failing at that point. So I'm not quite sure, but let's see how we go, because this would be, if that was the case, then you know that would be the, you know, basically the A wave, or the A wave to here, the B wave to here, and then the C wave up through to here. So look, it's doing all the right things across the 4800 here in terms of being you know, bullish, but you know, it hasn't rejected the 4800 yet. It hasn't, you know, come back up here, retested it, and then try to retest it again, and then sort of move down. But I sort of expect that to happen across the 47.72 area here, the group 2 here. So there will be some choppy price action within this little area through here. It's not like we fell out of bed here, like, you know, like the euro and so forth. Yeah. Alrighty. Look, let's have a look at commodities. Just starting with base metals and copper here. Well, it's bearish, and it's under the pivot within minor group 1, the 2 here, the 320, and we're counting 5 waves down from this high here, which is the 1, the 2, the 3, the 4, and you can see that we're either completed here, or there's one more little move down through to here, and then it's completion there, and we'll be having a larger correction within this area through here. Obviously, we're in group 1. When we're in group 1, we expect, you know, the numbers 1, 2, and 3 here to offer support and create a bouncy market. But we're also, when you drill into the sub-levels here as well, we're in group 1 here as well of 311, 312, and 313, 1, 2, 3. So it's going to be bouncy there as well. So there's not a lot to say there, but there is to say that there is support here. And it's not like this is really moving down fast. I mean, yes, it is moving down, don't get me wrong, but it's, and reasonably swiftly, but it's not like falling out of bed, so to speak, you know. So it's like over heels moving down quick, you know what I mean? So this is not moving down that fast, so it's not really displaying the characteristics of a third wave that we're looking at through here. But let's just see how it pans out. We've got, once the 5 waves here are completed, we'll see a 3-wave counter trend coming back up 50, 40 to 60%, and then down again from that point. But I am mindful of the personality of the structure, and it's not showing me, you know, these strong impulse waves to the downside here. it's sort of slowing down in a way. So, but anyway, there's not going to be a lot of price action here over the next few days, so to speak, or probably even a week. But more so on the precious metals, the gold here. So, you know, from yesterday and before that, you know, that we've been bearish on it. It's just been a little bit sort of tricky, but the idea is to sell gold, and it's moved down reasonably sharply. And yesterday we were talking about a possible sort of triangle pattern here developing, but it has moved through that. So I mean, we would expect it to, you know, take out these lows in due course. So this is what we're looking at here, and you know that we've counted this down here as 5 waves, and we've got the 3-wave counter trend, and then we're also counting this down as 5 as well in terms of the 1 down to here, the A, B and C here, and then the 5-wave structure here as well. So there'd be a 4th wave here. I think I counted that earlier this morning here. Yeah, right. So so look, it's just working its way down really. So it's at the midpoint here. So, you know, it's going to have a little wave 4 here, and eventually, you know, be a bit of choppy price action across here, and eventually find that as resistance, and then move down to the next level, which would be the 30 through here. Just be mindful of this trend line channel through here, as it will, you know, develop some support there as well. So yeah, look, stay short in this particular market, or some of the gold stocks. Some of the gold stocks, I did make a mistake on KCN actually, because I could see that on the daily chart I already had 5 waves down, so I was a bit reluctant to go further. So anyway, I'll sort some of that out with the robo stuff a little bit later on. But definitely on the short side here, and silver's the same as well. We were looking to short it from the 21.72 sort of area here, but realistically you kind of had to be there to sort of get it, unless you'd gotten it through here and kept the stop above the last high. But this will continue to move down through to the 2100 as well. There will be bouncing around at the 10, 20 and 30 through here. The normal bounce off the number 3 goes back to the number 4, and then fades at that point, and then moves down. And once the number 2 here is retested resistance, then you know you're going to get to the 21 here. So, but it's always a little bit tricky here. The market does normally work quite quickly between the number 8 and 5, and once that becomes the retested resistance, then it also moves quite quickly from the 5 to the 3, or the 1, 2 and 3 here is normally choppy sort of price action. So intraday trading is normally done between 3, 5 and 8. Okay, the oil market, pretty much straight up, you know, the 100 here is going to be resistance, and that's that. And secondly, it's going to have some sort of relationship with the S&P 500 as well. So this is the big account here. You can see this on the chart. So we've got this triangle pattern happening. We've also got this triangle here within the larger triangle. So we've got here an A and a B and a C and D and E here, and up for here. So it's a triangle within a triangle as such. So we are looking for a high in this area through here. So looking at we've either got a top in here in line with the S&P 500, or we've got a 4th wave unfolding through here. So if it's going to be the 4th wave, the 97 is roughly the 38.2 retracement level from this point here up to here, and the wave 4 of 1 lesser degree is also here as well. So the 97.20 may come to light there, if not the 97 here. Yeah, so this is the current move down through here. So we've got, it seems like we've got a 1, 2, 3 here, 4 and 5, then the ABC correction here for wave 2. This does look like a wave 3 down here, doesn't it? It doesn't look like a C wave, because normally in a correction the A wave is the sharp one and the C wave is the lazy one. But that said, we had the Feds, you know, reporting, so forth. So you know, it could be vice versa, but anyway, let's see if we do get a larger 5 waves here, because if we've got 5 to here as 1, and 2 here, and 3 and 4 and 5. If we get 5 waves here, then we know that we're going to get a counter trend and then another 5 here, and then we'd have to call this in as the top there. Alrighty, let's have a look at FX. Just starting with the US dollar here, and this is a daily chart here. So we've been looking at counting 5 waves to the downside through here as wave A, and because of the Fed's comments, it would probably be the wave A here of those 5 waves down here completed through here. So we'd be looking at a B wave coming into play here, and then a C wave down through here into the 80 here. So with that said, we can see that this would be the sort of count on this at the moment. So this we could see yesterday that this wasn't going anywhere. Do you remember that? So it was showing signs of a low being in place, and it's popped up from that point there. This could, of course, be counted differently within here, but it's messy, so it's not that important. So what we need to do now is start looking at this as being a 5 waves up and 3 waves back, and so forth, and counting that up through here. So that will be our focus. So, of course, the flip side to this would be obviously the euro, and this is the euro through here. So there's still two possible counts through here as well that we need to point out, and one of them is that the wave 2 here is in place, and wave 5 and of C and 2 is in place here, and we'll be moving further to the downside in terms of 5 waves down, 3 waves back up for wave 2, and then the 3rd wave down, and so forth. That's a possibility. The other possibility is that we're just at the top of wave 3 here. If I got to just bear with me until I find that alternative count here. The alternative count here is that, and this is how I've counted it here, is that we are just at the top of wave 3 here, and we're coming back in for wave 4 here. So which is just, the wave 4 here is just below the 38.2 retracement level taken from this point here. In terms of the trading levels as well, I think is interesting as well, because this level here, of course, we're in minor group 1 here at 130, but at 133 we're in subgroup 1, and we're in a bullish market here, and the market is really working through this as a normal bullish process. So the normal bullish process is the arrival, the reaction, the first high above the level, and then we get an A and a B and a C wave, and then we're looking for support here and so forth, and then moving up through here. So that's the other possibility. So I don't know which is which just yet, and they'll both count out the same. They'll both count out 5 waves down, 3 waves up, and 5 waves down. So it will only, once it starts entering into this here, we'll start to know the personality of this move here. Is this move sharper than this move here? Well, obviously not, because it's going to be like that. So it will be a little bit sort of tricky, but maybe take us a little bit longer into this structure here to work it out. But in the meantime, until we can work it out, treat this as 5 waves, 3 waves, and 5 waves. Okay, this is an 8-hour chart, but that's the pattern that we'll be looking for. And I think we're pretty close down here now anyway to the first impulse wave to the downside here. Let me just sort of, well, obviously we are I think this is just the 4th wave here, actually, because I think this is just the 1 here, the 2 to here, okay? And then this is the 3rd wave unfolding through to here. So we've got the 1, the 2, the 3, the 4. 1, 2, 3, 4. 1, 2, 3rd wave. I think this could be just the 4th wave here, and it could fail from here. But either way, if this is a 4th wave here, there'll be one more move to the downside, then the upside here. If this develops support on here, we'd have to take that Okay, we got that one there. I best do some work on this one. If this turns into 5 waves here, then we could have something through here. So this would be up for 1 here, back for 2 here, the 3rd wave, the 4th and the 5th here. So if you see at this point here, if we see, you go long, if you see a move to here, then an A, it'll B, it'll C, and then support back up through here. That's at the point that you'd go long from over here, okay? So if that's the case, do that from that point there. Otherwise, it's going to fail from that high there and work lower from here. So, and you could look to short there at that point there. So, but I'll do some more work on that. I've got to pull this apart a little bit further to have a look here. Just got to make sure that was the actual high there as well. So, but that's definitely down for 1 here and back for 2. Then that's not the 3rd wave because it's too small. So it's down for 1, back for 2. So I need to work, that's like the 3rd here. That's probably the A, B, C for the 4th here. So that's the 3rd wave there, obviously. So we can just peg that in there. And the 4th wave will pull back 38.2% from this guy here. Well, to that one or to that one doesn't make much difference. So that will be the 133 there. So look for it to fail there. That will just be short covering. This will just be short covering from the move down, so to speak. The Australian dollar as well has been affected by the Fed's meeting as well, and so there's a couple of ways to look at this, but it certainly does look bearish. So one of the things we could be looking at is obviously we're in the 4th wave here, and we know that we've got a 3-wave price action through here. So we could still have this as the A wave here, a B wave still to here, and then the C wave back up there, and then the 5th wave down through to here. Now that's possible, but because it's moved down so strong here, it's probably more likely that we need to put that wave 4 in here now as that ABC here, and then we're looking at wave 5 moving to the downside through there in terms of the 1, the 2, 5 waves down, 4th and 5th here. So that's what we need to be sort of looking at through here. And this would count, this is the 4-hour chart here, so we do have that ABC there. So, you know, unfortunately we may have to move that through to here and then look at this in terms of wave 1 here, wave 2 here, wave 3 here, wave 4 here, and wave 5 here. There still can be the B wave here as well, remember, and that would make that 5 waves down for wave 1, and then we'll be looking for a counter trend here as wave 2 here, and then wave 3 to the downside, which is quite fitting really when you sort of consider the count. So this move down through here will probably move down to 92.72 in 5 waves from here, so don't go chasing that. Once again, just the 1 minute chart through here. So we'd be looking at wave 1 down to here, wave 2 back to here, same as the euro, and then we'd be looking down for wave 1 here, wave 2 here, 1, 2, 3rd wave here, 4th wave here, and 5th wave into here, obviously somewhere into here. So we should see a bounce off here, but let me just check this again. 5, B and C doesn't look that healthy, does it? If it finds support on 93, glean a small position, and then glean another small position on 93.10 here, and then onto this one as well, but sell it at 93.30, allow it to do its correction across here. If it finds support after that, move back into it at that point, and then trade it up to the 50, get out, wait to see if it gets support. If it gets support, then move back in it from that way as well. Otherwise, we'll be looking at 92.72 to the downside here if that fails from here, and there's another little wave structure in there from that. So that 92.72 will play a part not only now, but it'll play a part later on as well, and a reasonably strong part too, because it's just not a normal 72. It's the 272. So I don't know. It just carries more weight for some particular reason. So, alrighty. Well, that's it. So we can. I think the main thing is well, in terms of is the gold market is to continue short on that, and more so probably the index, because the Australian dollar will interfere with this situation here as well. Lower wages and things, lower costs, so forth. Alrighty, good morning and good luck. Enjoy the day ahead.